going on, guys? How's everybody doing? Staying in one piece? Give me a quick sound check. Pop the chat out. Good, good. Cool. All right. What's up, guys? So, as you can see, same setup as yesterday. Oh, my camera's still on. I want to turn that off. You can see Freya is sleeping. Hey, you. Want to wake up and say hi? No? Okay. Let me turn off the camera. We're going to go cameraless today. I look like a bum today anyway. All right, sound check. Good to go. Sound is good. Cool. All right, good morning, guys. Hopefully everyone is in one piece. It is exciting times. Exciting times. I try to stay positive, right? So even when the market is just absolutely falling off a cliff, I find it equally exciting. This format is going to be the same as yesterday. So live trading session, half hour after the open, and I will check out the chat, take questions. I don't know, the whole like live stream format of pulling up a high time frame chart and then going down to low time frames. I feel like there's no value add in me doing that rather than actually trading, calling things live. You know, everyone kind of more or less does the same thing on their streams. You know, points out the high time frame levels, talks about the low time frames, talks about what we're already, what we've already seen. Most of us pay attention to this market almost 24/7. It's very redundant. And it's one thing to say things, after the fact or before, as a plan. This is how I would execute. This is what I would do. And then it's a completely different thing to actually be able to pull the trigger on those setups. So I have the NQ DOM, the ES DOM, and we're going to look for some trades. And honestly, this looks like a short right here. See if we could hold below that high. We're back in yesterday's value. We're back in today's value, but right at the low. See if we can get a puke. Otherwise, I'll just stop myself out. Already up 282 points on the day. I'm willing to give back like 50. We'll stop out. Not the best execution right there. But I'll go over things in a second. I don't want to jump into any trades like that and give away my day. But I just think this is a better format. All right, so as every other stream, none of what I say is financial advice. Strictly for entertainment purposes only. If you're interested in a non-KYC, very deep liquidity spot and futures exchange with options, I am now partnered with Bybit. So the link is below. It's tradebybit.com. You get upwards of a $35,000 bonus. That's if you deposit a lot of money. Everyone else qualifies for anywhere between, most people are going to qualify for at least a $100 deposit, upwards of $5,000. And again, this goes towards your trading fees. And you could use this to trade. It's not that you could sign up and then just remove this money from the exchange. If you're interested in any of the platforms that I use, those links, some of those links are below. I think they're below. And if they're not below, I have to set up my standard YouTube live stream video, like default, what is it? Like summary or body, the thing that goes below your videos. Because otherwise I'm just manually doing it most of the time. And I know from one video to the next, there might be different things below. But if you're interested in the platforms, again, the exchange, you could go to the Discord as well. I think the Discord video, I think the Discord link is below. It's the stable. It's public. You could search it. So it's one of the communities that you could search. And if you can't find it in the summary below, it's definitely in the resources section in the Discord. And the Discord is completely free. So I'm glad I didn't hold on to that short. Honestly, I jumped into that a little bit hastily. Feeling good this morning. Made the right decisions in the last couple of weeks. Ended up capturing a ton of downside, hedging BTC and ETH at the right spots. And I'm having a good morning trading the NQ. I was up like 350 points at one point, but now we've given a little bit back to the market. I'm not really worried as long as I don't give back more than half to the market. Now, someone asked yesterday, said, why do you have points? So as you can see up here, I have this in a point value. So this is the day's profit. And then this will show, P&L will show open trade profit. Why do you have it in points rather than currency, rather than dollars? It's because looking at dollars evokes an emotional response for most people, right? So if you're trading your setups and if you know what you're looking for to begin with, there's a lot of times when you might have an idea of what invalidation you consider your invalidation for your particular trade, and you bail out of the trade because you see that red P&L, you see that minus sign, you see those that red text on most exchanges or highlighted red. So that can easily take you out of positions. It also can keep you in positions because some people try to like get back to break even and salvage what they have rather than just me seeing, okay, this is how many points I'm looking for. When I'm looking at this and I'm down, it's not the same effect as looking at it and seeing an actual dollar value that's in the red. Obviously, we don't want to be in the red, but I was plenty in the red when I was plenty in the red trading equity indices because I had just come back after not trading them for years, and I was primarily trading crypto, obviously, and I was not trading it professionally. That I should put it that way. From someone who traded professionally, when it came back to trading equity index futures, I was just kind of punting and being a jerk off. So we got to do things the right way, and that means going back to my old habits, and that is one of them. Anyway, okay, so I think that everyone is aware of what is going on right now. Let me just make sure I could change my screens quickly. So I have Bybit up. So let me turn this camera off again. Here we go. We have Bybit up. This is not connecting for some reason. That's our tape. One sec. You hear the dog snoring in the background. And then main. Just make sure my hotkeys are working so I could switch between these. Yeah. So obviously everyone is aware. I don't know why the tape isn't working right now. It can't connect to Binance of all things, and I don't feel like going through that and eliminating that on Agar. So what has happened today? Well, we have SVB Financial Group that has dropped. I think it's down. What are we down today? So we're down 40% from yesterday's close, down 60%. A ton of banks, I think, have been already halted. And these are banks that they're not, this bank is big. Some of the other banks are maybe not considered very big banks, but they are banks that do service small businesses. There are banks that play obviously banks are important institutions. So this is quite interesting because this is, I think, probably one of the first signs maybe that things are possibly beginning to break in a much more material fashion than they already have. And it's not like, yields being up, the dollar being up, yields and rate, obviously yields, rates, same thing. That is obviously a sign that the Fed has been putting in a good effort to stop inflation and to stop animal spirits from constantly coming back into the market. This is one of the, I think, most serious things that's happened since the beginning. And I'm just kind of like trying to think of anything else. There's been other things, but I think that with everything that's happened, it's been kind of, I guess the best way you could put it is like orderly, where this is definitely much more serious situation, with potentially a run on a major Silicon Valley bank, a bank that is key for tech companies, startups, um, and is quite a large bank in terms of size. Now, this is not as big as Lehman, obviously, but this is big. That's the best way I could put it. This is big. This is the first really big thing in a long time. And is it possible that this maybe makes the Fed change course? I don't know. It's the closest thing we have to something like that, where I think that I would say it's probably in the bag already that we're not going to get 50 basis points this month. I mean, that's my opinion. We're bouncing off POC right now. We're all back into yesterday's value, but let's see if I could grab another short here. Buyer's not as aggressive this time around, though. This is probably a good, a decent short squeeze. Just want to see if we could fail at that high again. Looking at CVD right now, equal lows. All right, so that's matching up. But you can see that throughout the course of this structure, there's not as much buying coming in on the right side. So I think this is probably just a very forceful short squeeze right now. So it's not like it takes much buying to get it going. Back above today's VWAP or at VWAP, above point of control. So above the basically volume point of control and above the TPO point of control. Are we going to pop further? I don't usually like to get involved in value, but it's hard to see that this pushes all the way to the top of value, unless there's some kind of. I think that if something comes out with respect to someone buying SVB, then we'll probably see significant relief. Yeah, the dollar's down too. Now, I want to still pay attention to, so when I'm trading the ES, when I'm trading the NQ, this is great and all, right? This has been great for any kind of equity long. So seeing that the dollar is dropping, that has been something that has had an inverse correlation with equity index futures. So looking at the ES or the NQ. And this is a really strong move by the dollar, right? But the dollar is coming into what is potentially support. So I think I actually want to sell this level. But I don't know. I can't bring myself to sell it yet. So I'm mindful of where the dollar might bounce. If I am looking at possibly buying the dip in equities or selling a level, I do want to see where the dollar is with respect to its own market structure, because it has been trading technically. It is something that I don't really often want to do, get involved in the middle of value. The thing is that we do have this anomaly down here. So we do have that ledge, which would be a decent target right off of VWAP, but I'm not, we're kind of away from there right now. I don't know if I want to jump in this late, because this could easily just pop up. I mean, you have a ton of selling coming in now, so it's much more one-sided than it was at the high. So just recenter the DOM, see who's pushing. So ES still pushing. Yeah. Should have gone for that earlier. If you don't pull the trigger fast enough, the trade can already be uncomfortably far away from you. You might have the direction right overall, but you don't want to get too aggressive trading this, because this could snap up and clean those highs up before breaking back down, and it just makes for a really uncomfortable ride. Just monitor this for a second. So yeah, everything is pretty much falling apart, which is what happens when you have rates raised at a historical pace never seen before, at least for a few decades, going back to maybe the 1970s. It's going to just break down. The dollar is looking like it's possibly at an area where it could find support. Now, this kind of low down here is not something that I don't think we leave this behind, these singles behind, without retesting and filling this out. So this might just be a little bit too far away for me to enter in right now, but it is what it is. We'll get to BTC in a second. So this is our opening range. So this is our 30-minute opening range. If I actually zoomed out, it would have been a little bit more attractive to take that trade. So rather than having it on a 350 tick setting, having it on a 1000 tick setting, sometimes it just changes the perspective a little bit. Like yesterday, I was talking about a delta divergence being much more obvious on a 350 tick setting. See if we can get some kind of throwback and possibly lower high right around VWAP for maybe a better entry. I think stocks are headed lower overall. All right, so we'll keep an eye on this, but real quick, just to go over BTC. I am short ETH. Where am I short ETH from? Let me just double check. Pretty local. It's like 14.12 or 14.13. I was I shared it yesterday. I was in a really nice ETH short. I was in a really nice BTC short. I shared that on Twitter, but I ended up closing out and longing for a bounce. Let me change the screen real quick. I ended up closing that out and longing for a bounce. You guys, I think you probably saw the orders that I had down here. Not the kind of response though. That was back here. Not the kind of response. I ended up cutting that and scalping the short side again. As far as BTC goes, I mean, this is the worst possible area for you to be. So this gap, I mean, ideally you accept it below this low only briefly before getting bought back up. But the thing about this is a spot driven sell-off so far. So even though we have a ton of selling coming in derivatives, even though that's the case, there's been a ton of spot selling, and there's been spot selling because you have, again, major companies and institutions that have to offload, whether through bankruptcies or court cases, or the proceedings following liquidation, liquidating their balance sheets, and a lot of that flow is coming through Coinbase yesterday. So ideally, you would look at this kind of level and say, this is where I want to see traders get caught really offside, and this is where I want to see sellers get caught offside, rather. Some kind of sign of that, whether it's a buildup of open interest, whether you're looking at delta. But even into that low, it was just a case that funding was remaining quite positive, and that was just because spot was just selling off much harder than perps, and that's all that is. It's the funding is just a derivative of that delta between the spot price and the perp prices. Basket of spot versus whatever perp exchange you're using. So the oracles that make up the index. So that being said, if we look at this profile, we do have this little low volume ledge right here. Two high volume nodes. If you look at this entire thing, this is a low volume area, right? This is a low volume area, but this is a little bit of a ledge. So briefly bouncing here kind of makes sense, but I think that the more time we spend under 20K, you want to see 20K get bid. I think the more time we spend under 20K, the more likely it is that we just fill out this entire structure. That yearly open anomaly, the monthly open, whatever you want to use, is the same thing, obviously, because January starts the year. That's quite odd, right? I mean, it's a small sample size because the higher time frame you go, the higher you go up, yearly especially, but monthly as well, the less rotations you're going to have to look back on, right? So less candles you're going to have to look back on to reference. So it's not something that's really happened, but the entire move by BTC early on was kind of an anomaly. Super strong, right? Extremely strong trend. So if there's any asset to leave behind inefficiencies like that, it would be BTC. But now, given the way we're trading, this is basically just off the monthly open, off the beginning of the year, a one-sided drive upward. So it's very unlikely that, and just to put in perspective, if we have something like this on the daily, so I've talked about this publicly numerous times, targeted for shorts, for longs even. If you have an open like this on the daily, right, where there's no wick, immediately I don't look at that as a target right away, right? I don't think like, oh, if we're above it, I have to short until that cleans up, or oh, if we're, that we have no wick at a high, then I have to long right away. I look for the setup to form in that case, right? So maybe we have a swing failure at the high, and this is how the low of the day was, and price is beginning to show signs of weakness. Then this level just becomes an immediate target that I keep in mind. Like, okay, we're not stopping until we clean this up. So, the monthly and higher time frame charts, they carry, I guess, a little bit more weight maybe. If we're going to stay inside of this gap, I don't see a reason why it would just be bid in the middle of nowhere. It doesn't seem like conditions are really conducive for that. It seems like if there was any time where we would fall through a gap without a bid, it would be a period like we're in right now, and then retest that yearly open, which is around, I think that's, what is that, 16 something, 16.5. I mean, do we have to come all the way down there? I don't know. But are we likely to move lower? Yeah, I think so. I think that given the response or lack of response we've seen so far, I'd be a bit worried to hold any longs right here. Personally, the way I see it, you don't want to be bidding BTC and crypto when legacy risk assets are falling off a cliff too. We have gaps down across the board. We have halts. There's a decent amount of systematic risk, and I could get that that's a good time. It's a good time to be looking for longs when things are breaking down. But I think you want to let things kind of run their course. Ultimately, what you want, and because yes, everyone's bearish and market is taking a shit. What you really want is the market to have some kind of kickback, some kind of bounce, and then people to remain bearish and remain with that narrative, but the market to start moving sideways, right? Bottoms don't look like this, right? They look like on the low time frames. So just look at this on the 4-hour chart. That's not a bottom, right? A bottom is this. It's extremely violent, right? A bottom is, at least in a bottom, you're going to have a 4-hour candle that's engulfed within either one or two rotations. And I'm talking closing, right? So market closing back above maybe something like 20K. So without that, I think it's just premature. And yeah, I mean, if you wait for that, you're late, right? Because someone got involved at the low. But I think that you're operating with a little bit more certainty at that point. So we actually came back down to that ledge in the NQ. We didn't quite clean it up, but we came back to it. So that would have been a good short. I mentioned that ledge would have been a good target, but it is what it is. We are kind of cleaning it up right now, but it's still kind of ugly looking. We'll go over that in a second. So, I mean, personally, I don't care to get involved in places like this. Like, I don't care to buy the exact bottom of a larger move like this. I'd much rather let this develop. I'll trade things on the low time frames in and out on the long and the short side. But in terms of the high time frame structure, I think it's quite clear. I think I would want to see us reclaim 20. Put in some kind of higher low back within the structure, and then this looks like a big deviation into that gap that I've been talking about going back to here, right? Coming into this gap. But I don't like to just buy the presence in the gap. I like to buy some kind of snapback, some kind of structure that leaves that in the rear view. So, not looking good. Let's get back to the trading screen in a second. I'm not looking at alts personally right now. I was long DYDX briefly last night. I was playing Warzone. I was long this. Monitoring the position while I'm playing video games, bad idea. But ended up just closing around at break even. I'm not interested in alts right now. They could continue to just absolutely make new disgusting lows, and it wouldn't be weird at all. And then it wouldn't be weird for them to bounce ridiculously again. So real quick, let's just go to this, and we'll see just structure from a TPO. Make sure this is uploaded current. I love my M5. Not my first, but absolutely love it. It's the 50th anniversary edition. It's tuned, so it's just around 700 horsepower. Yeah, so far this does not look like what a low looks like. I mean, we have no excess at the low. We have no tail. This is not a poor low, so technically that's a good low at the bottom of a TPO chart. You know, a single column, 2 boxes. But I mean, what kind of low do you normally see? Well, you normally see some kind of excess, and if this ends up being the bottom, it's the beginning, right? And you have multiple days that retest that level and maybe, you know, take that level out before returning back within value. But as far as this right now, on the long side, I mean, like I said, if we started trading back above all of this activity, just redo this. If we started trading back above all of that activity, well, today's activity, and you probably do have some, you definitely, we're at the point right now where, yeah, I think that market can easily go lower, but I think that we're starting to get, where's the open interest? I think it's reasonable to expect that we're at a point where things could get crowded on the short side. And if the market did retake, like I said, if, you know, I would just say the bulk of today's activity, so around, you know, covering today's POC, today's volume POC, you know, 20,000 seems like a good number, honestly, because it's back, it's right around yesterday's low as well. So maybe if we're back above 20K, you know, we have something like, oh, this is BT, this is, we're looking at ETH. I'm wondering why it's not looking like a chart I had on the other screen. There we go. Here's my drawing tool just to change a color. If we're able to trade back above 20, you know, this is kind of a little micro range. The best bullish setup with a structure like this is, you know, failed continuation down, followed by a reclaim and then holding that. So it looked like we briefly had that taking place back here, but we ended up losing it. So now if we're able to trade back above 20 after this kind of pullback, right, even though it looks like it's failing. So yesterday's low, little brief consolidation, and then 2 attempts possibly at continuation, but failing and getting back above 20. I think that you're looking at, you know, 20,005 just to keep things close. Possible sort of slingshot up there. So $500 move. I know it's not, we're not echo bubble swinging, but just to give you an idea of where that is. And, you know, this move down is pretty one-sided. So that's a decent lack of activity within there, a decent pocket. It's not a gap. So this move down was, you could call it somewhat efficient on the way down because we did briefly build value in here. But, you know, it's not, this is a gap right here, right? So that's your air pocket between 21,265 and 21,000. So that's where, you know, if the market continued to break above 20,005, let's say we found support above that, you know, showing signs of strength, I think that you look at 21, because it's more than likely when you break back into these gaps that anyone who was long and is underwater, that's the area where they blew out, right? Where stops blew out, and where they, where there are stops that are blown out, you can imagine there are also people that just had that as a mental invalidation. And then because of that, them still being underwater, when we return back to that 21K level, it's often that you see it just acts as resistance again into a single print pocket like that. Now, would this be likely, us having one big down day, having one day of balance, and then we're all the way back up? I don't think that would last. That would probably be an exhaustive spike up. That would be something you would sell. So this is probably going to take some time, honestly, right? This is probably going to take some time. Just to look at a few other things, because there's nothing really set up right now for me to trade on the NQ. We'll go back to that in a second. I want to show you something that I look at and that I consider, especially when it's range bound. So taking a look at open interest. So I shared a chart on Twitter earlier. You could see that for this entire move, open interest has been pretty much in a range. So going back to the start of it, at the high, we're kind of just right back to that level. So this is not as good of a chart probably as looking at. So what I'm going to gather by this is that, one, for each of these moves, the moves up, the moves that have gotten crowded, they've basically been occurring at the same area within open interest values. So between 212 to 216, 218 levels. So that's where things have turned in terms of positioning. On the contrary, the opposite, when things were exhausted and positions were sort of squeezed out, it's been around, for this structure, it's been around this 189, 188 level. So this is something just to keep in mind. Like, if there's leverage from this high, that's where it has kind of exhausted itself. Although if we do zoom out and include the entirety of the structure, it does look like it's in relatively the same area as well. So it's local and it's further out, going back to the FTX crash. And I shared this on, I do want to look at the chart I shared on Twitter because I was going to just use that. But this is what I was sharing on Twitter earlier. It's just some perspective, right? Not called a long or anything. But if we look at just the current relevant exchanges, going back to FTX, so November, right? We're kind of at that area where, get rid of these again, kind of at those prior levels in open interest for each exchange. Getting back down. So the entirety of the moves and leverage coming in, trying to highlight each little gradient under there. So that, that's good if we don't consistently continue to have a spot seller hitting the market, right? Because then it's like, all right, so we're back at the same levels of leverage and open interest as we were in this range that we broke from before this entire move. That's a good sign, because this was arguably, positioning was pretty floored down here. So it doesn't mean there's no leverage in the system. It's a good perspective to have, right? This has been a clean out of positioning. But what matters now is if there's still spot inventory that's going to be hitting the tape. But regardless, where it is right now is not an area where I really care to get involved on the long side. I'd much rather see it reclaimed, or some kind of major puke and spread blowout that I could, capture on the long side. So right back at VWAP now. So just levels that I'm looking at. This is the TPO chart I use to make composites. This is a composite between 19774, excuse me, 11974 and 12141. And that is a multi-day composite going back to, that is the 27th of February. So, I mean, when we re-accepted into that structure, and that is right here. When we re-accepted into that, change the color of this again. We moved pretty quickly right to the other side of it. So there's a good amount of confluence on this level right here between being that composite value area low, today's VWAP, and then back above what is the bulk of today's activity after this, you know, what has been a very bad series of events. NFP came in hotter than expected. Employment did. Unemployment numbers were up. But either way, being below this composite makes me think that we tagged it already. Whoops. That must be a hotkey. So now it makes a little bit more sense where we settled over here. Little gap right here. Wait, it doesn't to you yet because you can't see it's off screen. There we go. Filling out this day. That's where things really picked up on the 2nd. And that's where we're kind of sitting right now. So this is just a little low volume area that we're filling out. Back below today's value, so back below 11,935. I think ultimately we didn't make it all the way. I think we end up breaking down to 11,847 region. So just cleaning up this low again. Hesitant to sell this again right near VWAP. Looks like it might push. But it's right at the underside of that composite, so I think I'll start getting filled for a little, see if we could take some here. Only 2 contracts right now. So if we're below 11,980, I'm happy. Place stops above that. No, looks like we might fire above there. That'd be cool if it could just die right at VWAP. Come back. Oh, wow. Saved. Wow. Good stop placement. Should I just escape with a few points? No. There we go. All right, I'll take some off right there. Okay. So that was probably not worth it. It was basically a 1-for-1. I should have just left that on, but after it almost stopped me out, I don't know. I'm worried about this. This is what I'm worried about right now. Looking at this streaming And this is, yeah, it is hard to trade and stream at the same time. Last 2 days, doing it fine. But one thing that is dangerous right now is we're trading this. Everything looks like shit. It should continue down. And I miss the announcement about some kind of, salvaging or saving of SVG. Some buyer steps out of nowhere. BlackRock, right? I mean, they had a portion of it, right? But imagine anything could send this market ripping back in the opposite direction. So that I should have just held on to. But I'm a little bit worried right now of hanging on to anything during the stream and then kind of losing my attention for the trade. I do like to stop myself out manually a lot. That's why. So if I had a trade on and leave a stop on, I will just pull myself out if it looks ugly, even if I'm in the money. Or even if we're moving back to my stop and we're not there yet. But that would have been a good trade to hold, honestly. Because we probably come back down to test the opening range low. Yeah, so my exochart template is in my Discord, actually. 230 points. It's 230 points in the NQ. So, I went over that in the beginning of why I have it in points rather than currency. So watch the beginning of the stream. And I think that's everyone should do that. And if you guys are on an exchange that doesn't offer that, hide your P&L. Put a piece of tape over it so you don't have to see it. So there's a good amount of selling coming in on this little move right here. I mean, it looks like possible continuation, but don't want to get trapped into that thinking and jumping in late. Even though I see I have this level marked off, I don't want to define a position off of that right now. This was the short to hold, and I got out for, small amount of points, but just looking at this move right here, a lot of selling taking us down here, right? More selling basically right here, and prices a little bit higher. So just want to be careful right now, getting too aggressive. So it's not in terms of percent. So, man, this is I mean, the NQ today, for example, is up 40 basis points. So 40 points, which is basically 40% of 1%, right? So it's less than, the NQ is up less than 1%. So, it's not like I trade the NQ looking to capture a certain amount of percent. I look to capture points. If you're trading the ES, if you're trading the NQ, if you're trading the MES, the MNQ, the contract value. So for example, like the NQ, I think the NQ right now is, what is it? The notional value of one contract with the NQ is, doing the math, 238,000. So you could think of 1 point as, so if you're trading one contract, 1 point is 4 ticks. 25-cent tick increment, 4 ticks in a point. It's just, you don't think about it in terms of percent. I caught a bulk of the points earlier this morning, right around non-farm payroll. So there is a lot of selling coming into this low right now. But again, not making a new low. If you guys have questions, make sure that you continue to ask in the chat, because like I said, these streams are a bit more casual, a bit more open. Actually, a good amount of buying coming in now and just getting completely absorbed at this little low. Probably going to spike, yeah. So you could see this buying that came in right here. Make it a little bit easier to see. So that buying that came in, getting completely absorbed right here. So maybe we're back, we're heading back down to the open. So this is so these lines I have on the chart, by the way, not those. Sec, pointer. So this black line, and then this black line, that's the 30-minute opening range. Some people use an hourly opening range. Some people use, 10-minute opening range, like more of an initial balance. You'll see people having different time settings for what everyone consider. Everyone refers to it maybe as the opening range, but someone might use 30 minutes. Someone might use an hour. Someone, might use a different value. I use 30 minutes. So, I mean, this is the low of the day. I wouldn't necessarily be surprised if we get some kind of bounce if we do take that out again. So if we break down to, that's where I would look to see if they briefly get caught offside. But I think the chances are, given what's taking place, that if we end up reapproaching the low of today, that we end up just seeing the full portion of the move down to like 11,848. So rather than buying and holding, 1164, 864 for a swing, I think maybe that's a time when we give it a second and see if it's got a little bit more dump in it. Thanks, Dave. What's going on, man? Yeah, so some people use a 30-second opening range too. You could use anything, honestly. Like, you could build a system around, and this kind of sounds ridiculous, but you could build a system around almost anything. And that's what makes trading kind of ridiculous. And it's a matter of you building a system around something, sticking to it, well, one, and testing it, obviously, right? And then sticking to it. And it's just, you're just figuring out ways to define trades, make them a little bit less than a coin flip and a gamble. And that's something that maybe doesn't make a lot of sense to people, but I've seen people use anything you could think of, honestly, and find success trading, even like things that sound like they wouldn't make sense, like the 30-second opening range, which comes from a well-known pit trader who said that was, a pivotal point right after the open, and used it. And I was using this briefly too, basically as just a micro range of trade for a quick rotation, honestly. So we're not talking like, the back inside of that composite and retested and failed right there. We're not talking like, 30-second opening range breaks out of that and you're long for the day or short for the day. We're more or less talking about it's one trade to start the day. And when I was using it, I was using it in the ES, and I was taking just a couple points, and I was using a hard stop, and I was using a hard take profit. And the tighter the day, the better, because my hard stop was basically just on the other side of that 30-second opening range. My take profit was like, 2 to 3 points outside of it. And then you'll see the whole, the next 10 minutes chop around inside of there, but you got one trade out of it that had a little bit of follow through after that, initial break. But there's plenty of times when it get caught off, it would be a little trap, right? Swing both sides of that. And it would have looked like it was a good setup either direction. And then you're back inside of it, 35 seconds in. So we can't hold today's value right now, which is if you're a dip buyer and you look at the structure, if you just look at market structure and say, okay, more people got involved here, more activity was done here, and we're not able to hold that, well, how many buyers do you have down here that are going to keep this up at that point? Or are they able to hold up what pukes from up here? So if you're building a structure, it's the same as a tree, right? Same as anything you want to see that's sturdy. You want to have a strong base. So you want to be above that, right? Just look at the structure. You want to be above that. And right now we're favoring it. So let's see if honestly we could get another short out of this. Unless we're back above something like today's VWAP. A little bit more into yesterday's structure. But right now bears are in control, so. So Pushkar, Alpha Trader is an amazing book. Brent Donnelly, one of my favorite people, honestly, that I've gotten to meet through Twitter. I read his book and then started talking to him through Twitter and talked to him on the side. And just, it's one of the more amazing things about Twitter. Probably one of the top 5 trading books, if I'd say top 2 that I've ever read. And, you'll have mixed reviews on trading books, whether they make you a good trader. Any bit of knowledge is going to be better, right? There comes a point when you could have too much and not be able to make decisions. You fall into sort of analysis paralysis. But I think in almost all avenues of life and all pursuits, just being more informed is better. There are trading books that are garbage, right? That are like just technical analysis, setup books. And it's like, okay, like that shit's, hey, maybe it works in crypto where it's going to work more than any other market. But like there's a lot of garbage snake oil books out there. Alpha Trader is definitely, I'd say, top 1 or top 2 that I suggest that people read, amongst other books that are not even to do with trading, like behavioral psychology books, like Thinking Fast and Slow. That's one of them. Either way, phenomenal book. When it comes to books, if someone said this to me and it made a lot of sense and it kind of relieved me. There's a lot of times when I buy books, okay? And I if anyone recommends a book to me, I immediately buy it. It's a thing I've done my entire life. I think that a thing that's been better since Amazon, right? Someone recommends a book to me. If you see someone recommend a book to me on Twitter, they put it on my post, I buy it instantly. I go on Amazon, I buy it instantly. And then I just keep the copy of it and I keep it out so I know that it's something that I want to get to. But I would find that like I'd get a suggestion and I would start the book and I'd be like, damn, I'm not really enjoying this. I've read this material in other books. It's kind of redundant. And then someone said, like, don't feel bad about actually just going through chapters. So, the beginning of the book, looking at the list of chapters and just picking out things that you think might be interesting and just reading that. And I think you could do that with any book. I think that if you open up Alpha Trader, though, you're probably going to read it, from front to back. So back above today's POC, banging on VWAP again. Do we throw up to the high, which is right around 12,228? A lot of buying coming in now. Just look at CVD and look at Delta on the bottom. Oh, I just used my hotkeys to reset. So my hotkeys, I could change sizes. I could reset the DOMs. Yeah, I'm a little hesitant about buying the break of this high right here because that's easily a trap. If we're right above VWAP, capture some people off sides and then take a puke. I don't know. I think I'm going for it. Yeah. Quick short. And I'll be out if we're back above this high. Gave some back there. Should have just placed a hard stop, but for the sake of trying to do things fast and trading while streaming, I mean, it was, listen, decent for a possible trap to set up. I mean, maybe I should have waited for this high to be grabbed. But chances are now if we're going to reclaim VWAP after all of this activity, chances are we're going to retouch that open. So that, excuse me, the opening range high, which is right around today's value area high. Yeah, fooled by randomness is great. I think Nassim Taleb's a dick, but I think he's put out some really good books. Best Loser Wins is probably one of the best too. I read that not too long ago. So I don't know. I'm like under the impression that this is going to fail again. So is it the trap right here? I mean, when we zoom out though, there's not a whole lot because NFP was the catalyst that got us going up, and then we rolled over and we took out the lows, and we took out a good amount of structure, and now we're back in in the middle, if not high, of today's range. Would it be weird for us to just on a squeeze take out that high right after NFP? No, it actually wouldn't be surprising at all. So I just want to be mindful of that. If we're trading back below VWAP, then it's a different story. So maybe we get some kind of push up to 12.26. So 12.26 being the opening range high. But again, today's value area, which is it's in development, so it's not nearly as important as looking back at a prior day's value area, is right here. So let's see if we have some kind of exhaustive spike into that. I mean, so far the sellers that are coming in were absorbing that and holding that level. So good amount sold, 587, and market's holding. So that's a sign that this is going to push higher. But now I do want to take back some of those points that I just gave back. Does this get front ran right here? So that's the value area we just tagged. Value area high. I mean, there's a lot of buying coming in behind this now. So does it squeeze further up, or does it just roll right here? I mean, we're at the range high now, so I really want to short it, but I really would rather see us tag that high and then fail. Because we could just tag this little low right here at VWAP and then pop up again. So now those buyers that just absorbed the selling at that 587, slightly underwater, obviously. So I want to see if we could just take this little low out. We're holding that volume now. I'm buying. Let's see. Quick scalp out. want to take back my points. For these streams, we're probably going to keep it to these tight little scalps, honestly, because it is difficult to trade, and putting on a swing, and then, I might put a swing on, put a stop on, go fill my coffee cup up, and I feel fine, right? But while I'm talking, if I was going to leave something on, again, I have right now I'm not looking at a news feed or any kind of live information. So if something changes, it'll be too late either way, but at least I'll have some context. Days like today, I want to kind of keep a finger on that pulse. So now what's likely, even if this was a low, is that we fill out and trade with imbalance. But it's a Friday, so it's not like, we're going to have another session closing today. So some kind of end of week flows make sense. That people are going to be holding positions into the weekend. Futures obviously open again on Sunday. Market has been one-sided for the last few days, though, so maybe we see some short covering into the close. The hand is fine, actually. Thanks for asking. Oh my God. What happened? So I was cooking yesterday. So a little context. If we lose VWAP, maybe we'll look for another short. I just think the chances are maybe we tag the high of that range. Although where we just bounced off of, even though it's not the high of the opening range, it is in kind of an area where you would expect things to get cut off. So value area high, good amount of buying came in up there and was lost. So if you look at the profile, you have a good pickup in activity up here. So a good amount of activity possibly trapped. So I was cooking yesterday. So the last 2 nights, my wife and I were like, let's have salads. I don't know. I had lasagna for like a week straight. It's my birthday. My wife made me amazing lasagna, and I ate it like 4 days in a row. Lasagna is great leftovers. When I was a kid in my house, there was lasagna or ziti like 3-4 nights a week. I'm dead serious. So again, kind of tired of that, right? I was eating that all day. And so we had salad. So I cooked her. She didn't really like salmon. Ever since having Addison, she's just, some of her taste buds have changed. Not a big fan of salmon unless it's raw. She doesn't like cooked salmon. I get it. Salmon, when it's cooked, it's a fishier fish, right? So I cooked myself blackened salmon. I cooked her blackened shrimp. Made a salad. So I had my salmon on the stove, but then I finished it in the oven. So I put the oven on 400. I threw the it wasn't cast iron. I wrote that on Twitter. Complete mistake. It was actually their stainless steel, hardcore chef's pots and pans. What are they? What brand are they? Well-known brand of stainless steel pots and pans. Someone probably can name it. So either way, I put it in. It wasn't cast iron. That was my mistake. I put it in the oven to finish it, and just left it in there for a little while longer to just make sure it was cooked through. I don't care. I like my stuff medium. I love raw fish, so that doesn't bother me. We're not talking raw chicken, but I don't really care to have my things burnt. But anyway, I left it in there, and then I pulled it out with the mitt, right? And then I put it on top. Just, I don't know what I did. Turned around, put the butter away, whatever. Didn't even think. A second later, monkey grip grabbed it. Full grip, because they're heavy. And gripped it and was able to pull it far enough to where I took it over the kitchen island, I did a pivot, turned 180, and then dropped it with the oil in it, everything. And that instantly, you know what happens when you burn your hand? It looks really shiny. And it hurt like a motherfucker. So I ate dinner with my hand in a bowl of ice, but then that begins to hurt. So we just put burn cream on it, and now it just feels dead. Today it feels dead. I've done this so many times before. Same exact thing, honestly. And my hand will just... Honestly, the benefit of my hands is they're very calloused. All clad, yes. All clad, exactly. So my hands are very calloused. So it'll bubble, but it won't be like burning soft skin where the bubble will leave. Maybe this is, I don't know, maybe I'm wrong. Maybe this is something that's normal. But when I burn my hands, the skin is really thick when it rips off. And then the skin under it is already like, it's not sensitive at all. So we'll be good. It's definitely, it feels very funny right now. My ring finger, my pointer, all my palm extending up to the base of my thumb. Yeah. So, any other questions, guys? So good trading morning so far. Gave back some points on trade 2 trades ago, but was able to take some back on that that long just a second ago. No, I don't have to use antibiotics. It's not a major burn, right? I still feel it. It's a major burn. I don't think, it's not that I said I don't feel it before. The skin of my hand feels just kind of, it feels funny when you're touching it yourself. Really bad burns, I don't even think you feel them anymore because it's destroyed all the nerve endings. So I don't think we're at the stage of a major burn. And again, I've done it numerous times. So when I was younger, so I have all these scars on my left arm. It looks like I got attacked by a bear. I have a bunch of scars. I have some nasty scars on my body, but I have these scars on my left arm that now my tattoo are covering or is covering. Really nasty scars. Like they looked again like a bear claw just swiped my arm. And that was actually from when I was a kid. One of my first jobs was working a hot window and working a pizzeria. So I used to be the one to reach in and grab the pizza and grab the food in the hot window, and it was really narrow. And the metal edge, there was a metal edge, obviously, and then a thing for the tickets that was metal too. You put, your food ticket in there. I got, a couple things coming up. They're in this order, blah, blah, blah. The food ticket holder was like aluminum or whatever, metal, some kind of alloy. And then when I would reach in, I can't even count how many times I would reach in and I would burn my hand on the bottom grabbing something accidentally because it's really narrow, and then very quickly yank my arm up and burn it on the top. So barbell workouts, yes. Callus trophies, yes. It's important to have them. But yeah, I'm probably going to wrap it up, guys. It's been just over an hour. Clumsy Clark, yeah. I guess that goes. Has BTC done anything since this stream? Not really. It's honestly looking a little bit better down here. I mean, the better of terrible. But even something like this, I just think that lows have a different look to them, right? You get multiple tests, a big sweep. Oh yeah, I'm a pretty hardcore chef. And I'm saying that somewhat jokingly, but no, I love to cook. I've been cooking for a really long time now. Yeah, I'm Greek and Italian. But I absolutely love to cook. I mean, I spent a lot of time in the kitchen. One of my favorite shows was this show on Netflix called Chef's Table. They just follow around the Michelin star chefs and incredible restaurants all across the world. And yeah, love to cook. I share one of my favorite chef's knives too. So I don't keep that a secret. Cooking is something that is, it's a form of meditation, honestly. At least the preparation is is very close to a form of meditation, in my opinion, at least for me. I'll sit above the chopping block with either headphones on, or if music's not bothering my wife, or listen to music while I'm cooking, and it's really easy to just get lost in that. The knife brand I have, it's a Japanese handmade knife. It's beautiful. It's I'll find out the name of it again. I share it on Twitter often. But anyway, guys, I'm probably gonna bail. It's been a good stream. We ended up tagging. See, that would have been the better short. We ended up tagging that opening range high. I mean, that is to the tick. So that's what patience is for, And it's a good thing I didn't hold that initial short, because that would have arguably been the best place to get involved. Oh, good to know, Ken. Yeah, we made it a day in advance. We made it on Saturday for Sunday. It's a really good bechamel in it too, and my wife added spinach. It was amazing. Amazing. Anyway, guys, have a great weekend. I'm gonna go live again on Monday, so getting back to doing these consistently. I hope you guys like the format, because I think this is gonna be the format moving forward. I'll bust out the camera again next time, clean myself up a bit. My beard's just getting a little bit crazy, and it's not something that bothers me. I mean, for a long time I went with the long hair, long beard look, after years of having a military crew cut. But yeah, it definitely needs to be cleaned up. It's not for everybody. All right, guys. Till next time.